Hey, what's up guys? Today is August 15th and I want to do a trade recap on the longs that I took this morning. And before we get into it, I want to go ahead and check out my stats for the last week. I was on vacation. Despite that, I've made $14,000 with a 50% win rate and an average risk to reward ratio of 2 to 1. And if we look at my day-by-day P&L, I've had straight green days, 6,000 last week, 8,000 this week. And the reason for my recent success, and if you haven't watched my last video, I'm going straight over my full setup, what I look for day by day, and that has been the reason for my recent success. It is the CLC rule: context, location, and confirmation. If you watch the video, you'll get a lot of value out of it, and if you want more understanding of it, I have a free Discord where I will link that below. You can join, and I do free training lessons, and I give videos out on how to incorporate this into your trading. Now, going into the market today, I was flat on bias, which I always am. I don't like having a bias. I think that can cloud your judgment. If you're just looking for longs, it will eliminate you being able to see the shorts that could play out and vice versa. I like being able to see the market as it is, and the best way to do that is to read order flow. If you're looking at the order flow, the relationship between buyers and sellers, it will show you the exact points that the market could reverse, that could continue, and you will be able to capitalize on trends. I used to be a guy that if I saw an aggressive push up, I'm just gonna buy. If there's an aggressive sell off, I'm just gonna sell. Instead, I like to be patient. I like to wait for the better setup, and that has allowed me to eliminate dumb trades and take higher quality trades. So I was flat on bias this morning, but I always like to look at the overnight as pieces of context for where the market could be drawn to. Looking at a volume profile from 6 p.m. yesterday up until 9:25, right before market open, the only thing that's really sticking out to me is this low volume area created from this sell-off in London. And what's important about it is at 7:50 to 8, and then right as the market was about to open, we kept wicking up into this range, but buyers could not hold above this price, showing me that the sellers that created this low volume node on the aggressive sell-off are defending this price, and they defended it well because as soon as the market opened, we had an aggressive sell-off. So that played out perfect. I didn't take this trade. 1, I like to be more patient. 2, it's a Friday. I've had a great last week and I don't want to rush into a trade. And then 3, we had news at 10 a.m. and I wanted to see how the market reacted to it. Now, what stuck out to me after this aggressive sell-off is 1, we had low volume areas up here, and we'll look at that on Bookmap. 2, we have VWAP above us. And then 3, for 20 minutes before this push up that I caught, we have all these lower wicks down here at these equal lows. And if we go to order flow and look at Bookmap, what we see is there's a lot of selling down here. A lot of selling at the lows, but the market isn't moving down. And one thing that's very significant to me is a CVD divergence. I like to look at effort versus reward. And if we look at a divergence in the CVD, we are seeing effort not be rewarded. Now, what I mean by that is at these equal lows at 953-ish, we have a negative CVD of 2,800, 2,900, meaning there's 2,900 more sellers than buyers. Now going to the 10 o'clock candle, at this equal low, what we see is there's now 3,000 more sellers. So there's more sellers than buyers, and there's more sellers here than there was at this range, but the market isn't able to break this level. So if there's more selling than buying, but the market isn't moving down, that's showing me that there could be a passive buyer absorbing it with the intention of moving the market up. And we can further see that by seeing the passive order that is sitting down here in this range. So that gives further context. Next, if we look at our volume profiles, there's 200 more sellers, 100 more sellers, 80 more sellers, all in this range. A lot more selling going on at these lows, guys, and the market isn't moving down. This, for me, is step 1 of seeing that the market could move up. Short term, where would it be drawn to? Well, 1, I like to use fibs as areas that the market could continue in an existing trend. If you are a different kind of trader, you may look at it as premium and discount. It doesn't really matter how you look at it. It's using these things to your advantage. Now, I know that VWAP is above us. I know that these low volume areas are above us. And I know that the 0.5 or the 618, you could call it premium or a discount, whatever it may be. These are all areas that are above us that the market could be drawn to if these sellers aren't being rewarded, and we could see where the buyers could move to. Now, looking at Bookmap again, Let's go up. The point of control is above us, VWAP's above us, and we have this area of low volume that buyers didn't have much of a chance to come do business at. So I'm saying, okay, if these sellers' attempts aren't working, we're in an already existing downtrend. We have the 0.5, the 0.618, VWAP, this low volume area above us. This could be a good target for me to take the market long, but I need more confirmation. So that is one for me to look at the CVD divergence. And the next, I'm going to go to my footprint chart. This is important to me. What I see is at this low for about 20 minutes, there's 400 more sellers, 13 more sellers, 258 more sellers, 129 more sellers. You get the picture. 232 more sellers, all at these lower wicks. We see a lot more selling. And if we look at the total volume of this range, there is the most volume since the market opened, and there is 1,200 more, 300 more sellers, all at these lows, but the market's not moving down. Once again, it should be effort versus reward. If there's a lot more selling, but the market can't move down, that is weird. So once 10 o'clock came out and the news came out, we had an aggressive sell-off, which was this lower wick with more selling here than at this level. We saw it on the CVD divergence. Now we're seeing on a footprint chart, and then the market immediately starts recovering. That is confirmation for me to take the market long. Once again, I took profit a little early. I was targeting VWAP, but I was trailing my stop pretty aggressively because it was Friday. I didn't want to be in a trade too long. I wanted to go enjoy my weekend. I've been on a hot streak, and my trade played out perfect. I had no drawdown on this trade whatsoever. Now, there were a couple people asking me, why weren't you targeting the highs? Why weren't you targeting these highs up here? Why were you just targeting the 618 and were you just targeting VWAP and the low volume node? Well, when you identify the context, which is in this shorter time frame picture from the overnight, we're in a downtrend. When the market opened, we had an aggressive sell-off. What is more likely to happen after we've already defended this low volume node from the sellers? Is it more likely that we're going to come up here and sweep out these highs and continue the trend up? Or is it more likely that we've seen such an aggressive sell-off that the market will come up to VWAP, it's going to come up to the 618, come up to the low volume node, and then continue to sell off? It's more likely that it's going to continue the trend. You can trade against the trend in a short-term sense. If it's bearish, you can take longs. If it's bullish, you can take shorts. But you have to understand that your targets and your exit points have to be a place that the market could potentially reverse on you. I took profit here, got off the charts, checked again 30 minutes later and saw that we started selling off. If I would have stayed on the charts and maybe I was wanting to hold longs even sooner, what I saw is as soon as the market came back up into this low volume node, there was more buying attempts barely filling this range, but the sellers that created this aggressive sell-off defended it, and then we had a sell-off. For me, I think a lot of traders struggle with identifying when to get out of the market, when to get into the market. And for me, once again, this is the area that I saw that the market could reverse. It was a perfect target. I also know people that waited for the market to come up and then take short. That was a perfect opportunity too, but using the low volume node, using VWAP as a target point, and using the CVD divergence and the footprint chart to see that there was failed selling in this range, this was a perfect area for me to take the market long. Now, that's it. That's a very simple trade recap of what happened today. I do these every day, and I do live trading in my Discord where I go over the CLC rule time and time again and incorporate this into my trading. If you want to learn more about order flow, you can check out my channel. And if you have any questions, just leave them in the comment. I look forward to answering them and making videos on them. I've had a lot of success with order flow, and I think that it is the single most important thing to my trading. And I've had a lot of people that have switched over from other strategies to now using order flow, and they're having a lot of success with it as well. So if you have any questions regarding reading Bookmap, reading a footprint chart, incorporating fibs, VWAP, low volume nodes, any of these pieces of information into your trading, let me know and I will make a video on it. But for now, that's the end of this one. Have a good weekend, guys, and I look forward to seeing you in the next video.